Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Are you familiar with the term flex season? Normally, it has something to do with getting really on your gym game, but not today. Today, we're talking about flex business parks within the industrial real estate space with my guest, Cody Payne of Colliers. This is a great discussion about industrial real estate in general and about flex space. And flex means flexible. You're going to hear all about it. Before we get to the episode, and I haven't done this in a couple episodes, I just want to remind you that the best thing that you can do to help us grow the podcast, get bigger, better guests, which is really hard because we've had the greatest guests in the real estate world so far, is to subscribe to the podcast, follow it so that those numbers show up as we scale up the charts. Let's get to Cody Payne. This is episode 140 of Zen and the Art of Real Estate Investing with my guest, Cody Payne. Cody is the Senior Vice President at Colliers in the DFW. He specializes in selling office, industrial, and flex investment properties. He's been doing this for a long time, owns, operates, sells as a real estate agent and industrial specialist. Cody, welcome to the show.
Thank you, Jonathan. Thanks for having me. I appreciate it.
Yeah.
I like the intro.
Yeah, no. Yeah. I'm very drab before, and then I get on, and here comes all the energy. But we're ready to go, and I'm glad to have you on because this is a developing space still, even though you've known about this for years. Just specific to industrial, when was the first time that you were involved in anything relating to industrial, even if as a kid?
I don't really know. I mean, my father worked in a lumber yard, but as far as getting into real estate, I mean, that was 2005 is when I got into it.
Did you go right into commercial and retail, industrial, this type of thing right away?
I did. So when I started in 05, and I started as a leasing agent, leasing small bay flex industrial all across DFW, and mixed in with a little bit of office and light industrial, things of that nature. But I got started on the lease side, and then over time transitioned into the investment sales side and then development side and whatnot. And we've just continued to carry that on and have built a really good team here over those almost 20 years now, I guess, 19 years.
Well, from your point of view, when you were getting started, though, just on the leasing side, why industrial?
Well, I actually didn't get to pick it when I got started. The broker that I was working for out here, he had
seems to have worked out.
He ran so I started with the guy. He ran a small local firm. He wasn't national or anything like that. And when I came in, he said, "Hey, he did big box leasing in the Great Southwest District." And he said, "Hey, I don't want you meddling with any of my stuff. So go mess with the small stuff, the small base stuff." And I was like, man, just kind of shoving me out there. But he taught me a lot and, really enjoyed it. It's an asset class that has evolved exponentially over the years, as you're aware of. But it wasn't by choice, but it ended up working out.
Yeah. Well, so just describe what's small bay compared to what you were talking about what he was doing, which is maybe just larger scale.
Yeah. So, the small bay side, I consider that, where your tenant size, your space sizes are going to be, anywhere from, they can get down as low as 500 feet, but really around 1,000 square feet up to, 5, really not exceeding 10,000 square feet too often. A lot of these are flexible spaces that, are incubator spaces that can go from, 2,000 square foot units to, somebody can then go into 4,000, 6,000, 8,000, and it has that flex. That's why it's called flex space as well, because it offers a lot of flexibility as to where, a lot of other industrial, you've got, the mid-size where you're dealing in, 20, 50, 70,000 square feet. And then you got the big box where you're dealing in 100, 150 plus up to, 1 million square feet, which we've got guys here that do that kind of leasing. But very much different tenant pool, obviously, different buyer pool, different everything, completely different world from the big box side.
Yeah. Before we get to the investing side, though, so who are the general tenants just for flex space now? I mean, it may have been different then because I think it has changed over the years, and we can go through that as well.
It's changed a lot. So when I got started, it was really your subcontractors and storage space. When I got started, that's really all it was. And, since 2018 and e-commerce and all the small business and COVID, I mean, these things have transformed into, and that's actually, I think, the best thing about it and why it's becoming so popular is because it's actually able to pull from other asset classes. And so, we're selling a project right now that they've got some showroom retail tenants in there that came from retail centers, and they've got an office tenant in there as well. They've got light industrial, they got your general subcontractors, they got machine shops. And so today, the flex space, the small bay, tailors to a lot more tenants than it used to. And that's why it's, I think one of the hottest asset classes. It's one of the top cross asset classes, meaning more investors from other asset classes coming to it. Multifamily was kind of running that space year over year, getting people from all others. And but because of the powerful rise in the economy and how these spaces are shaped and leased, and it's one of the, besides self-storage, one of the best inflation fighters as far as asset classes go. And so when you have a tenant leave and they roll over and you get another tenant in, your TIs, your finish out cost is nowhere near as high as it is in like office, retail, even multifamily and stuff like that. And so that's why you have so many people coming to it, because it's very good at hedging against inflation.
Yeah, I've watched the flex space develop because I was part owner of an industrial park in the Hamptons, which is obviously not known for its industrial areas for 30 years. I just sold my part, but over the years it transitioned from that contractors, plumbers, general people who were just using the space. They were cheap there. And then all of a sudden, maybe 10, 15 years ago, it was like, Soul Cycle, Plum TV, they were becoming these hybrid retails that had no interest in being on Main Street and wanted to have more parking. And we had lots of parking. Are you finding that that's a big thing? Retail can go there and get way more parking than they can get, with no parking streets on a Main Street.
Absolutely. And usually the rate's significantly cheaper, not as much small retail. And, these are tenants, like we said, are ranging, 1,500 square feet to 10,000. These are tenants that are not always solely reliant on road frontage, which a lot of times, when they're in these flex spaces, they've got good visibility, but it gives them a little more versatility to move and expand and downsize, increase at will. And we've just seen retail tenants flooding to these spaces. And, when COVID hit, the commercial kitchen side really expanded a lot. And so, there was one that we sold in Keller that, Chick-fil-A had actually leased a space there because their catering business had just become so much they couldn't handle it out of their storefront. And so they leased a space into. And so we see that quite often in these, and, it's space that's versatile. Like I said, we've seen office tenants flooding to it. There's, a lot of good benefits and uses out of them.
Yeah. And like you said, much cheaper option than trying to create a storefront, where I guess in the past, it might be nice for people to think they can create a storefront. But now if they can do it online and they're good at online marketing, they can generate a ton of sales and have no need to be in like a really good location, like you were saying before.
Well, it's the evolution of tenancy as well. Just like, I'm sure you remember, back in the day in the early 90s, mid 90s or whatever, even early 2000s, if you were driving and you're like, I need another, I want to change car insurers, you would just pull into the retail center that had a State Farm sign out front. And those guys aren't there anymore. And so because they've adapted and they're more online, and so they're just kind of using general office space at this point. But just with e-commerce and drop shippers and everything like that, these things are just becoming very popular. And that's why you just continue to see more and more of this stuff get built, and the leasing just keeps getting taken over because of that factor. And when you've got the office sector and retail and some of these others, struggling to pay these rents, right? Because we've got a flex dealer working on right now that, they're at, I think, 16 triple net, and the retail center down the street's at like 34.
Right.
And so they've actually got a couple guys from there just literally because of the rent difference.
Yeah. One thing I was thinking of too, I mean, with the advent of technology and the fact that nobody really knows where they're going anymore, they just plug it into Google Maps or, like you don't need to be a destination. Like someone just can look in, closest Sherwin-Williams and there it's an industrial park. Like you don't care. You're just following the map to where it goes. And then there's always parking. That's why I love, industrial flex. Like when it transitioned and they were putting a lot of those like jungle gym places for kids into industrial areas. I was like, this is great. Like we always have parking instead of trying to cram into like some small parking lot.
Well, and when you got big cities like DFW, Houston, Atlanta, and whatnot, what we see a lot as well is we don't see as many hubs centralized as we used to. We're seeing satellite locations for a lot of larger companies. And so CO2 companies, whatnot, back in the day, they would have a central location and they would just kind of spread out. Well, now these cities have gotten so big and, cities just keep growing and growing and growing that you see that they've now got smaller locations spread out everywhere so they can handle the areas a lot more efficiently instead of from a central one location traveling so far out. And that's why Amazon has so many fulfillment centers all over the place too, is because of the same thing there. And so it's really no different in the small bay flex. And that's another great tenant that it tailors to also is those kind of companies.
Yeah. Let's get into the investment side some. So for investors, give them a pitch on why industrial is a good investment. Because I think for, flashy, what you're going to see on social media, you're not going to see industrial as much. There's definitely more of it now. But I think when people think, hey, I want to get started in investing, they don't first think, hey, I think I should do some light industrial or small bay flex. Why should they consider it as an asset class? Because you and I both know it's a lot easier than some of the asset classes if you know what you're doing.
Well, and I think that's probably one of the best things that we hear about and we know and we see is, the learning curve, especially for newer investors. It's much easier to navigate. I believe a lot simpler, a lot easier to manage when you compare it to multifamily, retail, and office. Especially when you compare it to multifamily, because we've had a lot of multifamily private investors, family office funds have invested into it. And every manager says the best thing about it is they don't receive a call after 5 o'clock.
Right.
And that's when the multifamily calls generally start to roll in is after 5. The, other main benefit to it is a lot of times, not every time, it depends on how the lease is structured, but a lot of times leases are structured in a way that the tenants maintain their own space anyways.
Yeah.
So it's rare that they even get any calls, just period. And so the management aspect of it is very, very good. The second aspect that I think is one of the better ones is the tenant pool, meaning the tenant pool is very broad, very expansive. It's consistently growing, consistently adding more tenants in. Like I said, it's now taken from other asset classes as well. And so unlike, retail and office where we've got guys that lease that stuff and they'll see vacancy sit for a year, 2 years, in some cases, this stuff is literally sitting at sometimes just a month or two on average. And, that's very, very good. There's actually ways to kind of beat that out by doing early renewals and figuring out if somebody's, going to leave or not. So there's always ways to get that sorted out until waiting until the time comes. But tenant retention, rental growth, tenant pool, learning curve, management, and there's a lot of funds that are buying this stuff too. So, if somebody just wants to invest in a fund, which a lot of people do on the multifamily side, it's also easy to get in that way. There's a lot of little JVs that we put together with people that, hey, I've got a piece of land that looks good, but I need some help. And so it's like, well, this guy's good at building. So we're connecting a lot of folks to do that and partnerships, and they're very easy to come by. And so, it's an asset class that is on the rise. And
for sure.
Is doing very well and has a very bright 5-8 year future, continued success in it. And so I think with all those factors, it'd be hard to find an asset class that offers that.
Yeah, it goes back to the word flex. It's super flexible. Your tenancy is, like you said, or it could be vast. It could be really anybody at this point. And I really think it comes down to, like, if I was slotting like management, obviously multifamily is going to be way at the top, meaning you either have to pay for management who have to be on doing it all the time. And then at the bottom is self-storage, just because they're not actual tenants. like just above self-storage, and the management is industrial, but not much because of what you said. Like the people that are going into industrial, they know what they're doing. A lot of them are going to do their own build out. They're handling their own businesses. They know what they're doing. You're not going to be responsible for a lot of the things that your traditional tenant in maybe a mom and pop retail space might expect. Is that what's helping the growth? It's just that people are able to get it at obviously a better price per square foot and then put their own spin on it if it's kind of an open box for them.
Absolutely. And like I said, the other thing, the rental rate growth has been tremendous. We've seen 5% plus in a lot of areas, which is very, very good, especially if they're on triple net leases, then they're paying your, taxes, common area maintenance, insurance, all this stuff. And so, your profit's the base rent at that point. But, there's also a lot of different ways that you can build these things, style them, renovate them, fix them, however you want to do it. I mean, there's so many different ways of doing it, not just your basic metal efficient build that has a garage door and a door on it. Yeah. And there's a lot of different things you can do there. They keep, the amenities keep expanding on them as well. So amenitizing is huge. You see co-working companies actually getting into this space as well. Yeah. And so there's a lot of money that is looking at it, flooding into it. I don't know if you knew, but, a couple of years back, Blackstone actually made a big splash into it by buying Public Storage's flex arm off of them, which was called PS Business Parks. Yeah. And so now they're, one of the largest owners of flex space all across the U.S. And, with them doing that, obviously now there's more and more that are flooding into it because everybody wants to be like them. And so the collection of it to portfolio and sell off is on the rise. The branding and, amenitizing is on the rise. And so I think there's still a lot of good things that will continue to come from it. But we like it a lot. And I think that anybody, especially coming from the retail or multifamily side, would, like it a lot, because you're right. It's similar to storage. The only difference is storage's rollover is a lot higher. Yeah. Yeah, that makes sense. And when you're looking in terms of development or buying properties that you may turn into syndications, are you looking more for open land, or are there still like mom and pop industrial? Because in self-storage world, we're always thinking like, let's grab the mom and pops because companies like Blackstone buy all the other ones that are kind of mid-level. So you're looking for these ones. Does that exist in the flex space, or is it more of a land purchase to build, or both? Absolutely. I mean, well, there's both. I'll tell you, there's still plenty of mom and pop deals. So me and Austin here, we just actually traded 2 parks that were owned by an older owner. And I mean, their rents were half of market, which is like, If this was 2018 and you had a multifamily project that rents were half of market, that was like a gold mine. And so, or a gold mine. And so, we are seeing that on this side. Obviously, they're, getting fewer and fewer as the popularity of the asset class continues to rise. But there's a lot of money to be made on the development side, even with where interest rates are, just because of where the rental rates are in a lot of these areas and where they continue to grow, and the fast leasability of them as well. And so I think that if you're not a developer and you've never developed before, obviously you probably want to get some help on that side, but there's plenty of opportunity on existing assets. Yeah. And I mean, your cost of construction is obviously way less than traditional multifamily. You need less bathrooms, bigger open spaces, and you don't have to customize as much. So that's a savings, at least, in terms of developing onto raw land or just redeveloping what is there, right? Yes. And I mean, it's, I think, a little bit easier to build in phases as well, which besides storage, all the other asset classes are a little tougher to build in phases. Yeah. But this one's actually very easy to do in phases. So we see people all the time, they'll build a couple buildings, lease them up, and as they get to almost fully leased, and they're under construction on the next one. Yeah, and it doesn't really disrupt anything because the spaces are separated enough. I mean, you usually have big plots so you can organize the parking for one. That makes sense. It's almost like the thought of how people started building, traditional like developments, of 70 homes or something. Build the first 10, see how we go. Okay, we're going well. Let's get the next 10 out there. Does that help though to do it in parts like similar to residential, whereas now you have a set rents? So when you go to the second full bay product there, you already established the rents for your new product. So there's much less mystery in what you're going to do there. I always advise if you're building, I always advise doing it in phases. It's easy to do. You can also get your construction loan in phases as well. Yeah. So you're not taking the brunt, but yeah, getting it going in phases, I think is always key. That'll kind of help you know where you're headed and what to expect as you continue on and how the demand will shape and take place. But like I said, there's also a lot of little things you can do with these parks as well, by adding, industrial outdoor storage is huge, fenced in yard space. That stuff's leasing like crazy across the U.S. And so a lot of people we see are not just building these, but they're adding that onto the land parcel as well, which is not a lot of cost, but good rent, good rental income. A lot of companies need
your
it.
cost is a fence, right?
Pretty much,
access.
Yeah. But that stuff's like gold right now.
Yeah.
And because people have so much equipment to store, not just vehicles, but containers and all sorts of stuff. And so we see a lot of people will start building some of these parks, but also outline quite a bit of it for, IOS, which is industrial outdoor storage. And then if they need to collapse that as they build more, they can. But it's a huge amenity to tenants.
Yeah, I mean, I was just thinking like Southeast, boat storage. It's like if people who have boat storage, it costs nothing.
Oh, yeah.
The indoor kind doesn't cost a lot either. That's just like kind of general industrial. But even like outdoor boat storage, it's just like just pull into the parking lot. Those are just smart ways, though, to reuse extra parts of the asset so that if you're buying something and assuring that you have extra land, similar to self-storage, you can just roll out some more bays, to do more storage. But if you know and are establishing it, then you said you can build some demand on that, especially if there's not a lot of flex space in the area. You have 20 units going and now they know here comes another one. People can start to plan for that and your construction time is way less as well.
Oh, yeah, no. And covered parking is big. Like I said, people build storage units, large storage units onto these parks as well for some of those tenants to have the storage also. Some of them are doing shipping, receiving, or just storing general materials.
Yeah.
So, yeah, we've got a laundry list on, we've got a website that's dedicated to it, flexbusinessparks.com. And so we've got a laundry list of stuff that anybody can go on there and look and figure out how to amenitize their park if need be, or how to make extra money while they're building their.
Yeah, and I was thinking before, I wonder if it's more exciting for some people to kind of go to a little bit off the beaten path. Like if you just look at your traditional, medical spaces or where all the lawyers are, it's like you're basically next to all of your competition all the time. So if you're a lawyer and you're not a pass-by, you're on the second floor anyway, why wouldn't it make sense to go out there where your competition is like, a go-kart place and a food prep and an Amazon warehouse like that? That seems smart to me. Is that what you're seeing as part of the development?
I mean, we do see that. We don't see as many office tenants, but we see a lot more office tenants than we used to.
I feel like it's coming more though, because I think for myself, when I'm always looking for office for my team, I'm looking at these ones that are overpriced junk, and then I'm like, I would just like a big box, and I would just customize it. It seems better to me.
Well, I was at a small bay park out in McKinney, and there was a couple office tenants there, and I asked them why they moved out of a tower. They were on like the third floor of a multi-story building. And he said they liked it because the rent was cheaper, but also because he drove right up to his front door and didn't have to park in the adjacent parking garage and walk over every day. Yeah. And so he says he just pulls right up. And so, that's a convenience factor, obviously, but it was pretty interesting to see multiple tenants had come out of high dollar rent office towers to this because there was no anything that they needed from the office building. Now, granted, I don't think you're going to have, 50,000 square foot call centers in these kind of buildings, but you'll have your mid-level, and small independent companies and stuff like that I think can look and utilize it depending on, like I said, it depends on how you build it and how it looks, right? You do the nice showroom glass up front or something like that, you'll attract a lot larger tenant pool. It's not uncommon to see like a Papa John's or a Subway in a lot of these either. That's
double smart if there's like a big tenant in there with a lot of people. I mean, just making it easy for everybody.
Oh yeah, but no, it's like I said, that's why it's called flex space, because it's very flexible, not just in size and parameters, but for the tenants as well.
Hey, this is Jonathan. Thanks for listening to another episode of Zen and the Art of Real Estate Investing. On this brief interlude, I wanted to tell you that we have a mailing list. I actually don't love mailing lists. There's so much. This is not an automated mailing list where you get on a drip campaign. These are written once a month, will eventually be at once a week again by me, direct, and they're not spammy. So if you want to sign up for our mailing list, you can go to bit.ly/streamlined with a D mail. Bit.ly is bit.ly/streamlined mail. See you there. I'm going to throw you one more maybe surprise flex space and see if you've ever seen this. So I did it. I learned it from my friend James Solomon. So I was in the art world for 6 years, and gallery spaces were at a premium all over. He worked for a gallery in New York City, but out in East Hampton, there was this tiny little industrial park. And he turned it was a nice bay, but he turned it into a full-on gallery, which is perfect because you don't want to be on the road. It's easy to get to, and it was really private showings. And then I did that in Sarasota too, in a very small one. And it worked great. It was like an ancillary gallery where you could show more, but people loved to go there because it wasn't as fancy. And of course, like the spaces are easy to maintain. So putting high-end art in there, you still felt totally safe. Everything was fireproof. Like you really didn't have a problem there. Have you seen that, or am I just uncorking something for galleries everywhere who are spending $50,000 a month in Chelsea on their rent?
I haven't seen many galleries in flex space. So there is one that I did see that was near I don't know what you call it, but so in Austin, Texas, there is a park that had a gallery in it, and it also had one of those companies in it that you go into. A lot of social media people go in there, and there's just a lot of different areas that you can take photos in that just has different
it's like
kind
a
of
selfie
booths
zone
and
or
areas.
something.
Yeah, and so I've seen that. And so you've seen the escape rooms in there too.
Yeah.
I mean,
I've gone to the escape rooms in there. We're like, where are we going? We have to go 3 stores behind, up a stairs, and then you're like, oh my God, it is right here. But that's a great example because they don't need to be on. Mini glow golf. That's I've seen that a lot in there.
Yeah,
it's interesting though because I mean we've gone through so many different types of businesses that can go there. Hopefully some listeners are thinking like, oh, I always wanted to start my own business, but I can't afford these traditional rents. This could be an option for them.
It's perfect. That's why I said, it's not just a subcontractor's dream where you've got, a lot of these parks will have pool companies, landscapers, plumbers, electricians, and whatnot that are very much needed throughout these areas. But it also is tailored to the other guys. We don't see a lot of the glow mini golf people in there, but I feel like now that I'm like thinking about them, I'm trying to remember one that actually lasted at any location at a retail center for more than a couple of years.
There's one not near me anymore, but pretty close to me that's still going, and it's on like 10 years. And it's, no, I'm not going to say the name of it, but I went there. In the dark, it's great. And then they turn the lights on. And you're like, are you kidding me? This is it? Hey, if you can keep the lights off the whole time, that's not bad.
You need to.
So as an investor for you, when you're looking for a space, what are any type, it could be land or it could be a space, what are you specifically looking for, and where are you seeing the options for getting kind of the best deals with what you're working for right now in Texas?
So, and we do work all over the U.S., not just Texas, but if you're looking, like, let's just start with existing. If you're looking at existing and we're looking at it, hey, is this a good deal to invest in? We look at obviously where are the rents at, where the market rents, how do we get there? What can we improve to get better? What amenities can we add to make the project better? What amenities and branding can we do to kind of insulate the building to, consistently beat out the competitors, if they're around? So it's going to be very similar to multifamilies. How do we do that? And, are the leases gross to where we can convert to triple net? How long will the lease up take to do that? What would be our potential lossage and tenants to, get back to where we need to be? And so doing that's, the fun part. When it comes to new build, there's a laundry list of demographics that we look at.
Right. Yeah. Similar to self-storage, maybe different types of things, but doing the different type of things that storage is very, focused on the drive-by percentage. But what are the demographics that are really important for industrial flex?
So, if you're going to be like outside of a major city, you want to look at the growth, right? You want growth patterns. You want good growth patterns. You want good household income.
Yeah.
You want a good amount of spending per capita, which, that will be in certain growth areas as well. The reason you want that is because that'll tell you how much money is being spent in that direct area. And maybe you can get some showroom retail tenants in there with that kind of number. The amount of new businesses that are going in out there. We look at home ownership versus renter. we like the home ownership side to be at least 70% versus 30% renter.
Yeah.
And reason being is what we've seen, and we see in all these areas, is if there's a lot more renters in the area than homeowners, the subcontractors, you won't see them as much out there because there's not as many services that those guys are usually tailoring to as much. And so, especially if there's more multifamily or something like that, you maybe not have a need for as many pool companies if there's not as many homes that have pools or landscapers or whatnot. And so we've got a lot of factors that we look at. We kind of plug it in. And like I said, some have a little bit of this here, not so much here. And so we kind of weigh it, but that will also tell us, and then we look at the competition. We figure out where their rents are today. We're really good at tracking and going back and looking at where their rents were a year ago, 2 years ago, 3 years ago. So we got the growth patterns. We get the occupancy. We call all of them. So whenever we do a site assessment, we do probably 100 site assessments here a month between me and all the guys.
Oh, wow.
I mean, we do. Yeah, it's pretty rigorous because we want to make sure that if we're building somewhere, if another client's building somewhere, that they can have success, and we want to make sure that we're there when it comes time to sell, or if we're an investor in it, we want to make sure that it has success. And so, the last thing we want to do is guide somebody to the wrong side just to get something done. But finding the right site's not too hard right now.
Yeah. So we were just talking about finding the right site, but for you, especially for what you do, is it important to find the right investor? I mean, there has to be a subset of investor who maybe want to park money, but they're not going to be good at this. Even though it's less management, are you able to vet someone and say, not sure you're the right fit for that? I feel like they have to really understand what they're getting themselves into because it's a different breed of investment.
It is, but I think it's a pretty simple investment, and I'm not just saying that because I'm not just saying that because I've been doing it for 19 years. I mean, I'm just saying, I think it's pretty easy to understand and it's easy to grasp. The only thing is it may not be the look that some investors like. Yeah, right. But you can make it look very good, especially if you're doing it in some areas. But no, there's plenty of investors that we say, hey, maybe this ain't the asset class for you. But at the end of the day, it's rare. We got a lot of people that like it. A lot of people love it. The returns are great on it. Even with construction costs and interest rates, we can still do very, very well. We've got a couple of funds that we.
I think just like with a lot of investing in general, if you're buying right, you're giving yourself scale. You were talking about value add for these, and that's really, what you buy at is how much you can make. If you know what like you said, rents are 50% of what they should be. That's already a jump if you do it correctly and fix that. But then if you add more amenities, you're just pumping that up a little more, and then your value is going to double, right away if you don't have to do major reconstruction.
Yeah, and like I said, we've had a lot of multifamily people come over this asset class, like quite a few. Haven't had a single one not like it.
Yeah. It makes sense because I think no matter how you're invested in multifamily, there's just more potential for things to go wrong because there's just more tenants, and they're residential tenants. So things go wrong, buildings, more plumbing. I always say with self-storage, it's great. You can have 100 units and then there's one bathroom. So how much bad stuff can really happen? Wrong? It's fireproof. Very similar though to industrial, less bathrooms, large spaces, and smart construction that costs less. So if a new investor approaches you, they have the money to invest. How do you guide them into industrial in terms of should they be starting in a syndication if they're not ready to be in really forms of management? And then let us know how the industrial syndications work. I'm sure they work similar to other ones, but it's still, I feel like LPs in a syndication, they still need to kind of know what they're getting themselves into in the return end.
Yeah, and you're right. It is very similar to multifamily, retail, hotel. All the syndications are very similar. They're usually paying out a certain percentage at that point. But as far as somebody coming new that's coming into it, if they want to take the approach and go build it themselves, we can a lot of times give them good contractors to get in touch with, the right engineers and, civil engineers and people to connect with. If you're, buying something in the city and it needs to get rezoned, we've got several companies that can help you out with that too. And so that's a big thing if you're not doing it in the ETJ. But if they're just looking for a passive investment, like I said, there's a lot of great funds that are doing this. We actually invest in a couple of them because some of those were actually help guiding the sites, designing the build, helping it get leased up. And so we're very confident and comfortable with those decisions. But, when it comes to syndication, and if you're looking to, you want to buy this land and you want to do a little syndication, I mean, it's literally just getting with a group like ours to figure out, all right, what are the rents going to be? What are my returns going to be? What's my potential sale at that time? And then now they've got their cost, and you mix that with the build cost, lending cost and all that. And all you're figuring out there at your point is your delta and what you can pay back.
Yeah. And I mean,
that's where you figure out.
Yeah, they can come to you and you have all of the information, through the last 19 years, which can help. So that can take someone who's, novice as an investor, but have money, and you can make sure you're pointing them in the right spot. Because I think industrial will be hard for someone to show up with no help, just like every investment, and be like, hey, I'll just knock out an industrial park here, flex space, and then try to work it out with the city, not even knowing the correct zoning. All of those things are so important. So there's a lot of due diligence, though, for this, especially in terms of new development, but even in redevelopment of these asset classes, that people like you need to be in the middle of to make sure that people don't go wrong with their investment, right?
Right. Well, not to give it a pun, but our team did write a book on the flex space domination. I want to send you a copy. I think you'll like it.
Absolutely.
And that kind of helps guide, gives you enough to be dangerous, enough to be a dominator is what we call it.
Yeah.
We love helping guys find the right piece of land, make sure that, they understand the right type of build to do there, because, there's so many different models of this stuff. You got the efficient build, the flex showroom, the premium, the condo, the hybrid. I mean, there's so many different ones that you can do that tailors to different type of tenants and a different type of outcome, because, building these and selling them as condos is also a big thing as well. And a lot of people do very, very well on that. Yeah. Oh, yeah. A lot of people do very well on it. I actually know a couple of groups that buy existing, they make it a condo regime, and they sell it to the tenants that are leasing from them. Or they kick them out and they sell it to someone else. And so we see that too. So, I mean, there's huge benefits in both sides.
That's one that I always think about condoization and small scale multifamily, but that's really interesting for flex space, because that makes a lot of sense. I mean, condoization is smart overall because you could just make more on the overall asset, but you're also giving people the opportunity to buy spaces that they probably wouldn't have back on Main Street, like we were saying.
Oh, yeah. And, one of the groups that we do a lot of business with on this, the reason they do it is, and, they tell us they go, we sell them a building that's already occupied. They go, they condo regime it. And they go, half the time we already have the buyer, they're leasing it from us.
Yeah. Because the prices are good comparatively. So they don't even realize they can afford it. There's definitely a way to afford it if they're doing good business there already. Yeah.
And it's not like you're building from scratch and now you're trying to sell the condos. It's, hey, you're going to this guy, hey, you're paying $1,800 a month.
How about some ownership on that money?
Yeah, how about we sell it to you and it's the same price, And so they do that as well. And so we've seen guys buy, some of these parks at, $120 a foot and sell them off as condos at, $225.
Right.
And so there's very good money to be made in the condo side, but it's also area specific.
Yeah.
Not every area is a condo area. So understanding that, but I do like the condo side as well. It's just not a long-term, income play. It's it's almost like a fix and flip.
Yeah, I really like that, though, because I'm just thinking there's a lot of those people who were in the retail space who never thought they'd be able to own their own space. And your pitch is you can pay the same amount and also own it. Let's do it. Because actually, you'll probably pay less. I mean, well, not with rates right now, but.
Well, that's why you got to find the right park.
Right.
That if you're buying existing that has the rental rate that you need to achieve. It's like, hey, these guys are paying $16 a foot, triple net. Well, that equates to a 195 or whatever dollars per square foot, and our basis is here. And so that's why I said it doesn't work in everywhere, but it is a model we've seen quite often. And I know two guys that do it very, very well.
Yeah.
And they do it all across the US now.
Yeah. Interesting. Oh, so let's talk just about across the country. I'm sure are there any areas that you think are a little bit more ripe for this type of flex space where you're seeing more people are finding, hey, there's more opportunity here? I'm sure you guys are running data analytics on it all the time, but I know you're in Texas, but are there other parts of the United States that could maybe use a little bit more flex space.
Yeah. So Arizona, Alabama, Georgia.
I can't believe Arizona needs anything. I feel like everyone's building everything there.
Man, they've got really good rental rates that keep increasing, really good price per square foot.
Yeah.
Texas obviously has a lot of good areas as well. Florida does too. The only thing that's hurting Florida on any of it is the insurance premiums out there is just a destroyer. And I know that on the multifamily side too. Our guys say that's one of their biggest complaints out there is the insurance side. Yeah. And so Florida's a good one. South Carolina is a good one. Colorado was for a long time, but I feel like quite a bit of it's starting to get a little oversaturated, but the rents are still good and the sellability is still very, very good out there. But there's a lot of good markets all over. There's a lot of little niche markets, but you always want to build to sell. And when I say that, I mean, always understand your exit, not just cash flow, because if you're just buying cash flow, then you go buy some in New Mexico.
Right.
When you go to sell it, it'll be the same price that you sold it for in many cases, or than what you bought it for. And so the appreciation just isn't as much in some of those areas.
Yeah, it does seem like a type of build that could work anywhere if you do the right research and understand what your competition is, like you said, and all the demographics. If you do it right, I feel like it's almost a no miss over time, because what we've been saying is this is an asset class that's increasing for occupancy. It's an opportunity for a lot of people to get into a different product that's, you can just find by Google Maps. Because it was weird when these flex spaces started. I remember going to them, with my sister. We take the kids and we're like I was saying before, I don't know where we're going. We're on one of those industrial side streets. There's a million, Mack trucks out there. And then you just pull in and you're like, what is this? And then you see a little sign and then you go in and there's an entire, gym in there or something.
Oh yeah. Yeah. They're loaded with CrossFit cool. guys and all sorts of stuff. They're great. And a lot of the tenants have good synergy with each other too.
Yeah.
And so, especially, I don't like body shops and mechanics, but a lot of those guys work well together in many cases. And so, but they kind of trash parking lots and
not their fault. It's just
easily.
A bunch of cars and oil flying around.
It's just the business.
Yeah. Before we hop off, let's just talk amenities, because when we're in the multifamily space, we're talking about, what they can do to that is more community. But the way that you were talking about it, I think there's a lot of opportunity to make more synergy happen inside of these places that maybe don't look like that would be the thing at the start. But then when you reconfigure it, it really becomes a place like that. What are some amenities where you're going into an existing facility or that you build one that you think are important right now in terms of growing flex space income?
So obviously, if you've got extra land, you can do the IOS, the industrial outdoor storage. You can do covered parking. You can do storage buildings. If you're ceiling heights high enough, you can do mezzanine space to where it allows for a 2-story. We see that quite often as well. There's a lot of, front signage that, you can build and charge tenants for. And so, parking is also a huge amenity. We've got a lot of parks that overbuild on parking and, charge additional for that.
Yeah.
So there's a lot of little things that you can do to some of these parks to kind of help, bring stuff up. We see even some companies offer shared forklifts, shared Wi-Fi. There's just quite a few amenities that exist to where when I started, like I said, in 05, there was zero amenities whatsoever, and a lot of your tenant sizes were around 5,000 and 8,000 square feet. And today, the most ideal size is around 1,800.
Wow.
And
really?
So that's what I'm saying. It's changed so much.
Yeah. For anybody who's been through it, that's really interesting number that it's only 1,800 square feet, because you're right. The original formation of industrial that I was used to were, giant spaces where people could pull trucks in, and it's just much different now. Very, very different.
Well, it's just like office, office in the early 2000s, it was 250 square feet per person. And even with COVID, it's down to 184.
Yeah. Times are changing.
You would have thought it would have expanded more, to keep everybody away from, breathing on each other.
Yeah. Well, so, you're expecting a big increase over the next 10 years in terms of your asset class and people investing in industrial. How would people get into industrial as a class if they're just kind of new again and they're just trying to learn about industrial? First, I'd say they're going to read your book, right?
That'll tell you enough to get dangerous and to figure out how to get started. We got to get an action plan in there to, figure out what areas are good and what things you should be looking at. And you can reach out to me. We've got a great team of guys here. We'd love to be informative to help people out on the front end so that we can work with them on the back end. But just do as much research on it as you can. And luckily for us, there's not a lot of people in this sector, but it is getting, it will get crowded, just like multifamily. In 2018, you could throw a multifamily agent and hit a few more at our firm. And so, but as asset classes come and go, and even though multifamily guys, some of them maybe aren't as doing as well right now. I mean, a lot of the occupancy is still doing very, very good. This one of the first times I've heard debt. Yeah, and that's why, actually I heard of a complex in Houston that was getting foreclosed on. It was 100% leased. Yeah. And it's because the syndicator couldn't get it refinanced.
Yeah, and it's a good asset. I mean, it's a good asset. It's 100%. It's ready to go.
Well, and one thing that I think that has hurt multifamily quite a bit, and what I hear from people that are coming over to invest in the small bay flex side, is the taxes and insurance. Is to where on the small bay flex, especially if you get triple net leases, the tenants are paying their portion of that, and you just don't get that in multifamily or storage.
And
a lot of times in office,
triple net multifamily, and that's never going to happen.
It'd be hard to explain that to a lot of family. I mean, a lot of people in the flex side, don't always get it either. It's something that you got to master the explanation of it, but. And it's setting setting the standard up front and understanding what to expect from the billing side.
Yeah. Awesome. All right, Cody. So the book is Flex Space Domination?
Yes, sir.
Awesome. So look out for that. And is the best place to find you guys at flexbusinessparks.com?
Yes, sir.
Yeah. Awesome, man. Well, it was a pleasure speaking to you. I'm glad you just gave us a whole whirlwind of industrial. We probably unlocked some ideas for people on what they can do there. No, that's really what I hope, because I think that helps the people who own them, and it helps people with businesses that are looking to get into new spaces.
That's what I hope is hopefully I gave you enough to be dangerous to go out and get it figured out and see if it's something you want to do. But like I said, I can't name anybody that got into it that didn't love it.
Yeah.
And hasn't done well on it. And we sell quite a few parks year over year, and we've got a great team that's been together a long time, and I can't name one person that said I never should have invested in that ever. Yeah. I never had it.
Yeah. Awesome. Well, thanks for spending the time. I really appreciate it.
Absolutely. Thanks, Jonathan.
Yep. All right. That was Cody Payne. I'm Jonathan Green. We'll see you next episode.
Wait. You have reached the end of the show. This is the part where you're going to get ready to check out, but I've actually changed this part. For over 120 episodes, you heard the same thing. Well, now I've changed it. I've thought about doing intros to the next episode, but I'm going to hold off on that for now. These are my pitches at the end. I've got nothing to sell you at all, but I do want to remind you that it really would help us if you support the podcast in the right way. All that means is subscribing to the podcast so you get it on Monday and Thursday, writing us a 5-star review if you believe that we deserve a 5-star review, sharing it with your friends, and being a participant in the Zen and the Art of Real Estate Investing community. Soon there's going to be a new website launched. Maybe when you're listening to this, it's already going to be out there. That's where we're going to have collaboration. You're going to be able to see a lot from the guest. It is coming soon, and I just want to tell you, from me to you, I don't know how I got here, over 100 episodes. I'm so appreciative of you listening to the podcast, and especially sticking around to hear this part. We'll see you next episode.